Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, July 6th, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a registered financial advisor. I'm just a guy on the internet. This is for informational purposes only. Please do your own due diligence. It's your money. It's your responsibility. I actually said that this is Saturday, which is when it'll be published, but I'm actually making it Friday afternoon. As many of you know, I live down in deep South Texas near the Mexico-Texas border, and there's a possibility we will see the Hurricane Beryl come ashore in our area. So I wanted to make sure that I got this done and uploaded Friday afternoon is actually when I'm publishing this or making it. So I don't think everything will be timely. I just wanted to put that out there. We have the hurricane possibly hitting here, anywhere from here up to Houston. So we don't know yet until tomorrow afternoon, probably when the thing gets back into the Gulf of Mexico and we can get a better handle on what's happening. Otherwise, I'm sure nothing will change with the information we have here. A couple things I wanted to point out, now that I'm doing this, well, ostensibly full time, there's a lot of people that watch the videos that like the videos. You can help me out a lot by liking the videos, commenting, or even subscribing. Those things help with the algorithm. They help attract more people. Helps YouTube to understand that you guys like it and that it'll get put in front of other people that have a similar interest in the things that we talk about. So I ask you to do that if you don't mind. I'd also like to talk about the Actionable Intelligence Alert newsletter. I have that on Substack. There's links to this in the show notes. I have a free subscription, a weekly email that goes out that has links to where I curate all the things I've been looking at over the last week or so, videos, articles, graphs, everything that I find of interest, and it helps give you some insight into the things I'm looking at. I also have the paid newsletter, and that's $179 per year. That is where we get into specific ways to take advantage of the themes that we discuss in these videos. So that's all available to you if you'd like it. That goes along with that subscription is there's a Discord channel that you can join where a lot of subscribers get on. I interact there. We talk about all kinds of things. A lot of good ideas get generated there in that Discord channel. We're also going to be expanding some of the offerings that I have for subscribers. For example, we're going to have more regular Zoom calls where folks can come on and we can discuss specifics or have questions or what have you. And so I'm looking to make this as valuable of a subscription as possible. I actually just made a video yesterday and published it about the Actionable Intelligence Alert dividend portfolio, which I think is unique in the context of what you will see in your normal dividend ETFs that just kind of look for the dividend champions. In the dividend portfolio that I've put together, I'm looking for not only good paying dividend stocks or companies, but also ones that are kind of out of favor and have the chance to inflect. And so we're looking at, a really good income stream that has the potential to increase over time as dividends are increased, and in inflecting businesses that then can give us possibly a capital gains ticker. So that's the kind of stuff that is available with a subscription to the Actionable Intelligence Alert newsletter. Okay, the advertisements and the plugging is over. Let's get into this week's discussion. So this was a chart that a lot of people I'm sure saw on X. This is from Kevin Smith of Crescat Capital. I think this is just like the visualization is really striking. And what you're looking at here is the white line. This is a Cisco at the top of the internet bubble, which was for this particular stock was March 27th, 2000. And at the time, Cisco was the NVIDIA of that era. Okay, it was, because the internet built out, they built all these routers, and you needed routers to build out the internet, and the internet was going to transform the world. You know the story, kind of the similar story that you hear at AI, the story that you heard about railroads back in the 1800s and heard about radio in the 1920s. All these things were transformational and had big impacts economically, socially, what have you. But overvaluation's overvaluation. And so at the time of Cisco's maximum, as you can see here, at the point of Cisco's maximum enterprise or maximum level of value during that internet bubble, the enterprise value of Cisco as a percent of GDP was 5.5%. And again, this was the NVIDIA of that time. And so now you look at NVIDIA nowadays, and this as of 6/18/2024, you see the parabolic increase in NVIDIA's stock price, and it represents now the enterprise value as a percent of GDP is 11.7%. So you have to ask yourself, yes, I'm quite sure that AI will have some impacts. It will be, in ways that we can't even necessarily foresee right now. But is it worth 11.7% of the United States' GDP? History says no. Probabilities say no. That doesn't mean it can't go higher. I mean, anything can happen, right? But again, as I've pointed out before, this time is not different. There's nothing new under the sun. The same emotions, the same mechanisms that have taken over, and the same human frailties of greed and emotion are present in all these eras. And that's what my view is we have here. But this is just astonishing when you look at this. What I thought at the time. I mean, I was in that. A lot of you guys are kind of young, maybe not even born during then. I mean, I don't know, or you were really young and didn't really know what was going on. But I remember the bubblicious conditions were the same arguments were made, the same justifications for the overvaluations. And I can show you chart after chart after chart, like in Cisco's, what happens when something goes parabolic. JDS Uniphase, there was a whole bunch of them. Pets.com. I mean, they used to value various stocks of internet stocks just based on eyeballs. It was called eyeballs, how many views they were getting. That's how new the internet was. And they would get a valuation of billions of dollars just based on eyeballs. And they wouldn't necessarily even have any revenue. Forget about profits. I mean, a lot of them didn't even have any kind of revenue. It was just eyeballs. And it was just, what went up straight came back down. So gravity asserted itself. I suspect something similar will happen here. And so this is part of the commentary from Crescat as it relates to NVIDIA and this chart. They have a monthly commentary. I'll probably put a link to it in the weekly free email. It's worth reading. I really enjoy their discussions and their videos that they do, market videos. But here's the quote. But it is not just NVIDIA. When we look at all of the largest 10 tech stocks combined enterprise value relative to GDP in 2000 versus today, the valuation is also about twice as big, over 60% compared to about 30%. So what they're saying is that the combined enterprise value of the 10 largest tech stocks is 60% of US GDP. That's just crazy. Then it goes on to say, the basic law of economics that we postulate works like this. Valuation comparisons relative to GDP matter because the economy at large can only grow so much, and there is only so much total economic spending to go around to drive the earnings and stock price multiples of competing free market enterprises. And a lot more than just 10 companies are gunning for this market share. And so it kind of goes back to the discussion I had last week, where I've shown other charts and graphs where you have historic undervaluations in energy, basic materials, transport, utilities, and you have these stocks that are representing 10 tech stocks representing 60% of the enterprise value of, or as a percent of GDP, 60% of, I mean, they're not worth it. Yes, Microsoft's a good company. Yes, NVIDIA makes good chips. They're not, this is a bubble. And again, it goes back to what I've said before. I have not been right to this point. I suspect that eventually these things historically do not continue forever. They eventually correct, and when they do, the bottom drops out. As we have shown before in the previous slide, you saw what happened to Cisco. You can't go straight up and straight up forever. It's not going to be tenable. Something's going to happen. I mean, there's allegations. I don't know enough about it. I've read some articles or some other people's opinions. But for example, NVIDIA, some of the business practices that they're engaged in, like vendor financing. This is something similar to what Cisco and other companies did during the tech thing, the internet bubble. They were accused of vendor financing to juice sales. So there's nothing new under the sun, guys. So take this into consideration, please. If you have life-changing profits, if you have profits at all, I mean, some people have ridden this all the way up. There's nothing wrong if you have a 5, 10, 20 bagger to take some profits. Don't get into the mindset like a lot of people do. You walk down, you got a lottery ticket, it hit, and then, you don't take care of it, and it goes down because you get emotionally attached to it, right? Because if it's went up 10 times, why not 20 times or 30 times? You have to know when enough is enough. So this is Michael Cantro, simple recession rule: unemployed persons year-over-year percent growth greater than 10%. You can see that basically when unemployed persons year-over-year growth is up over 10%, we typically have, well, just about every time, I think, every time that's going back to 1950s, 52, I think, you've had a recession. So we've done that now. So we have unemployed persons year-over-year percentage growth is up 10%, greater than 10%. Guys, we're probably already in a recession. Okay, I mean, things are now the data is finally coming in. We were a year early on this deal, and early means you're wrong, right? And so I take no pleasure in the fact that we're going to have a recession. It's probably going to be a deep one. I mean, the Fed should probably already be cutting rates, but they're not going to. Again, we've talked about this before and why that is. The egg that they have on their face for getting inflation wrong with the transitory call, they're always going to be late. They're always going to be reacting. And so this idea that, people are like, they're only going to do a point. If the deterioration happens in the markets, and if unemployment starts going up, this stuff's going to happen very quickly. And I think you could see them shift. By the end of the year, I think it's going to be obvious that we're in a recession and that rates are going to need to be cut. And like I said, in previous rate cutting cycles, they really don't mess around. Once they start cutting, it goes pretty quick, because you're usually in a situation where they need to get liquidity going, whether you have a market correction or the economy's coming apart. So one of the things I pointed out in the recent issue of the Actionable Intelligence Alert paid version of the newsletter, what typically happens in the markets after the Fed starts cutting rates. And if the Fed cuts rates and it's not because of a recession or some kind of market dislocation, then the market typically goes up over the next year. Again, if they're cutting rates because it's not because of a recession or a market dislocation, then the market goes up. But if they're cutting rates because it's a recession or there's some kind of market blow up or credit event, then the market typically goes down. And they're going to be cutting rates because there's going to be a recession. So understand that the market, once they start cutting rates, your market's probably going to go down for some period of time. That's probably when these tech stocks are liable to blow up. So be prepared for the fact that we could have the NASDAQ down, 30, 40, 50, 70% over the next year and a half. I'm not predicting that's going to happen. It's unknowable, but I'm just telling you what the statistics are, what history is. Okay. And that includes our stocks and our portfolio. I'm looking at this. You don't want to be a trader. You don't want to try to guess. But if you've got profits and you're a nervous Nelly, and you don't want to give everything back. You don't want to ride through a 40 or 50% or more drawdown. Lighten up if you've got profits. If you know from your own analysis and your own self introspection that you are going to be getting sick, you're going to be having headaches, you're going to worry, then we're on thin ice right now. And so you really need to be careful. You really need to know what you own. You really need to have some introspection of how much of a drawdown you're willing to take. Because what will happen to a lot of guys is they'll say, "Oh, I can handle it," and then the pain, and then in a bear market, it doesn't stop, guys. It just keeps grinding you down. You say, "Well, it's down 25%. Okay, I can handle that." Then it's down 30. Then it's 35, 40. Then you're down 50%, and it starts weighing on you. Okay, so understand that that is a very good possibility that this could happen. Again, I can't predict the future. I can't tell you with certainty if we have a recession, when it will happen, how severe it will be, how big of a market dislocation we're liable to have. It's all unknowable. What I will say is historically, the bigger the bubble, the bigger the drawdown. So, and in a situation where the stock market is going down because it's in a bear market, most stocks will go down initially. Okay. Again, I think that the reaction of the central banks will be to go back to the old playbook, lower rates, eventually end up at QE, slosh the world with liquidity in ever greater amounts, and inevitably that's going to benefit a lot of the resource sector and gold stocks and gold and things like that. But that won't be the initial reaction. When you have liquidity, when you have a liquidity event or liquidity becomes short, then volatility increases greatly. Now, if you have cash, that this can be life-changing. If you have some dry powder. So again, take a good look at your portfolio. What can you really live with? Go look in the mirror and ask yourself who you really are and if you can handle this, because it's coming. Okay. And if you wait to figure it out in the middle of the drawdown, it's going to be very painful. Take my advice. Again, I can't tell you what to do individually, and I certainly don't know the future. If I could predict the future, really, I wouldn't be making videos on YouTube, right, guys? So again, we have to go with probabilities, go with history, and try to do the best we can in a forecast. I don't know if you want to go to 100. Some people might need to go to 100% cash because they just can't take big drawdowns. So be aware of that in a stock market decline, in a bear market, all these stocks that we talk about in the portfolio are stocks, and they will likely be affected also. Again, I expect the powers that be to do what they normally do, and that will be positive for us down the road. But can you get across that pain threshold? Or do you just want to say, I get out? But then if you get out and nothing happens, see, this is the dilemma that you have to wrestle with, and you miss out. So maybe it's good to take some off the table, keep some core position in case things reverse or don't play out like we're talking about here. I know this sounds like a cop-out, but no one can give you 100% certainty. And if you're looking for that on YouTube or the internet, you're not going to find it. All you can do is kind of have a sense of why you own what you own, and then kind of know yourself and how much volatility you're willing to endure, can endure. So it goes right. Here's the Kobe SC letter. Job numbers keep getting revised down. This was a tweet breaking. Both May and April jobs report numbers were just revised lower by a combined 111,000 jobs. The May jobs report was revised from 272,000 to 218,000, while the April jobs report was revised from 165,000 to 108,000. This means that 10 out of the last 15 monthly job reports have been revised lower. On a net basis, the U.S. economy really only added 95,000 jobs this month. Meanwhile, the unemployment rate is now at 4.1% since December 2021. The labor market is slowing down rapidly. And this is the last peg of the hope framework, right? The the framework that Cantro came up with, which I really like, that being, that works on the downside and the upside, that housing, gets hit, orders get hit, profits get hit, and then the last leg is employment. And of course, once they cut rates and you come out and you go through the recession and come out, then everything reverses, right? Housing goes up, orders go up, profits go up, unemployment or employment increases. So again, these things are going to happen with a lag effect. Immediately when they cut rates isn't going to solve the recession problem. Okay. And these things take time. Now understand that the rest of the world, I looked at the June PMI for the globe and it's still up above 50 and was up slightly from May to June. So I think the rest of the world is, coming out and, economic growth is working. Again, many central banks around the world, the majority have been cutting rates for almost a year now. So that lag effect is catching up there. So again, in the big picture, and the U.S. is still the largest economy in the world, but it is, as a percentage of the overall GDP, a smaller number. So the U.S. going into a recession at the margin will affect other countries and trading partners and various commodities. But you're going to balance it against what's happening in the rest of the world and the fact that they're already increasing liquidity and cutting rates. So it may not be as bad. It's not synchronized. Let's put it that way. So this is from Game of Trades. I've seen this person has put this chart up several times over the months. It's revised here, it seems like. Well, this is only through May of 2023, but job openings are declining rapidly. So what I wanted to point out here is this is what you look at. This is what the 2000 tech wreck, what happened with job openings, what happened during the great financial crisis, and then what happened during the self-imposed recession that happened because of the pandemic. And then you see the amount of job openings, how they're declining. There's still a lot relative to, but the economy's bigger and there's more people, right? So, but this kind of downturn massively like this, that's obvious, has in the past coincided with recession. Again, this is from Kevin Smith at Crescat. He had a tweet that I thought was good. It's just reminding us about how hard mining is and how long it takes to bring a mine from inception to production. And it says the global average time to build a mine has increased to nearly 16 years. The shocking aspect of these calculations is that they assume the macro environment we experienced over the last 20 to 30 years, that being low energy costs, historically low interest rates, a more globalized environment, relatively low labor costs, and low material costs. We are currently facing almost the complete opposite of this situation. Additionally, ESG efforts will likely exacerbate the situation, creating one of the most constrained long-term supply dynamics in metals we have seen in history. And this is why I am optimistic and bullish and calling for a super cycle. Yes, demand is going to pull, but supply is so restricted and it's going to be so difficult to increase supply. I think that's really, the difference being from the previous one when China basically entered the WTO and was basically acting like a black hole and sucking in all the commodities. That's happening now in India, not to the same extent, but in other emerging markets, demand is increasing, but not to the same level that happened with China. But supply is constrained, and we've pointed that out ad infinitum over the course of doing these videos. And so here's the chart that he put up, also shows the time required to build a mine from discovery to going into production. Here's the various countries, and you're anywhere from over 20 years in Brazil down to around 9 or 10 years in Ivory Coast. And the average is 15.7 years. And so if you do have issues with supply, it's not going to get resolved overnight. That is why these super cycles are so lucrative in their ability to create wealth. And that's why I think you have to have that longer term perspective. Yes, you have a secular bull market in commodities. It's going to be multi-year, possibly a decade or more. Yes, there will be cyclical downturns inside that secular bull market. We've talked about that before. Specific to uranium, use that volatility, use that to your advantage to add to your position, and look past the short term to the overall thesis. Now, if we have some kind of global depression, deflationary depression, yeah, that would change my view, but I just don't see that happening. The governments around the world have demonstrated they know how to create inflation, and they would rather have slightly higher inflation rates or even greatly exceeded inflation expectations than they would a deflationary depression. Deflationary depressions mean, French Revolution, stuff like that, right? Bolshevik revolutions. It means revolution. People can adapt themselves to higher prices and inflation. They won't like it, but they can adapt themselves to it. You can't have 30% of the population not working and people starving to death. And why you can't just fix this problem now just by having creative destruction. The problem is so big now, and so many inefficiencies, and so much investment that shouldn't have been made, malinvestment has been made to correct the problems. If you just tried to fix everything at once, it would end up in a, like I said, deflationary depression, and you would have revolutions. So they'll rely on inflation, as they always do throughout history. It's the easiest path of less resistance. So this is another chart from Crescat Capital. I think we've shown something similar. I like these kind of setups, right? Basically, the white line is the gold price, and the multicolored line is the GDX ETF. And basically, as you can see in the past, they've tracked fairly closely, but until like the last couple of years. And so this is a divergence that I believe will either be rectified by gold coming down or miners going up, or some combination of the two. What we could see is gold continue to go up. What I think is the scenario that I'm liking the best is that gold keeps going up over time and the miners have a massive rally to play catch up. I think that's happening, but I don't think that happens, as I've said before, until we get through this mania in these AI tech stocks. And then capital, when it starts coming out of that sector, is going to rotate into these other sectors like this, and this type of situation will be arbitraged away. So, yeah, GoVX had their mine in Niger. Their rights were taken away. It says, breaking, GoVX Uranium has been informed by Niger's Minister of Mines that its mining rights have been revoked and returned to the public domain. GoVX intends to challenge the decision. GoVX still has its mine permitted. They have a mine, I guess, in Zambia. I never really followed this company. I never really thought much of it. I didn't think they were going to do anything. Yeah, Niger's really not playing around. This is kind of a result of the coup. This is playing into that whole theme of the rise of the global South and East, throwing off the colonial yoke of France. Okay, and then they need to develop, right? And they have these uranium resources that they know. I mean, they're not stupid. They know how to read Bloomberg and the Wall Street Journal. They can see that there's uraniums in a bull market, and that they have this poverty-stricken country, and one of the ways to improve that, or at least steal enough money for themselves, is to get the uranium mines up and running, and get capital coming into the country. And so if you're not going to develop the mine and bring jobs and capital in, then they're just going to throw you out. Now, they probably couldn't get away with that with the previous governments, because the kind of governments that were installed, they were installed governments by the empire, right, by the hegemon. And so they were there to exploit and take advantage of the country. And so, that's one way of looking at things. People could say, well, I'm against coups or this stinks or whatever. And that, does that put pressure on other companies there? Yes. But I think that, there's other companies there that have better prospects that are probably going to be able to develop their mine. And that being Global Atomic. Would I put all my money in it? No, but it's a speculative buy. And they're making progress. That mine, that DASA mine, will get built, as I've said before. And, but I think it's going to be a hard road to hoe for anybody. And there's going to be a lot of, for the leaders of the country, I'm not saying that they're, there to do the best for their people. I don't know these people. I just suspect when I look at, these guys with these Halloween costume military uniforms on with gloves with cut off fingers and stuff, and a beret, I'm just like, this is cartoonish. But I don't know these people. Maybe they are saviors of their country and they're doing this all for the people. I doubt it. But, they need economic development, and if you're not going to put money in, then they're going to do stuff like this. They're going to take your mining rights away. Okay, GoVX is going to challenge the decision. So what? You're going to challenge it in a court that the hegemon, that the world order controls, and nobody's paying attention to that anymore. I saw that the ICC, basically ruled against Israel and its Gaza thing. So what? There's no enforcement mechanism. It's like during World War II, I think, or when Stalin, I forget the circumstance, maybe it was when the Soviets moved into the eastern part of Poland. And I think that the Pope in Rome, whoever it was at the time, issued a statement that, the Vatican's against this, blah, 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 whatever. And I think Joseph Stalin responded by, okay, great. How many tanks does the Pope have? I mean, that's kind of how this stuff works. That's kind of realpolitik. Doesn't mean it's right. Doesn't mean it's nice. Doesn't mean it's the way I wish it was, but this is the way things are. That's why I say choose your fighter wisely. So this is a chart of Paladin. This was done by Triangle Investing. The guy interviewed me the other day, and he kind of pointed out here what I've pointed out before. I've done the same exercise with like mega uranium. This is from the last bull market, from 2005 to 2007. This is Paladin. And you can see he's went on here, or somebody has, and pointed out the drawdowns. There's been 1, 2, 3, 4, 5, 6, 7, 8 drawdowns over the course of 2 years of the previous bull market that took the price of Paladin stock from less than $1 up to $9. And there were 8 drawdowns, anywhere from 50%. There's a 40% in there. Here's a 48%. Here's another 40%. So you had 40% or more drawdowns in the course of a 2-year move that was a 10-bagger, basically. And so the question you have to ask yourself is, when I say make volatility your friend, this is what I'm talking about. There's 2 ways to approach this. I bought, in the current bull market, have bought the stock so cheap that I just ride through this. I don't care because my cost basis is so low. If you're just coming into the market now and you're selecting uranium stocks, wait for these drawdowns. They're going to happen, and then commit your capital. And then if it, you don't go all in. And then if you have the uranium thesis and you like the company's doing what it's supposed to do, and then it, nothing changed here and it is down 48%. Well, the thing to do was buy, right? So this is what I'm talking about when I say make volatility your friend. This is how you really make a tremendous amount of money and make life-changing wealth. You can buy it for very cheap when nobody wants it and just ride it up for a 10-bagger, or you can exacerbate your returns and get even greater returns by understanding that when you have the supply-demand imbalance that we have, you don't see anybody building mines, that any kind of pullback like this is a gift horse if you have dry powder. If you have dry powder and you get drawdowns like this, nothing has fundamentally changed. Now, it depends what company you're in. That's why, I'm advocate for most people just go into the ETFs. Okay. You don't have the ability to do the analysis of individual companies or get a service or something that you trust. That would be my advice. Most of the juniors that are out there are garbage. They're not going to produce any uranium. That doesn't mean in a uranium frenzy, price frenzy, and a blow off top, which is what we saw here in Paladin, that all stocks won't go higher. They likely will, but understand that your junior that you're in love with probably will never produce a pound of uranium. So I like charts like this for the reality check that they are. Fossil fuels rule. They will continue to rule because they're so useful to man to do work with machines. And that's something that you can't do with electricity on everything. Electricity is a very valuable commodity and can be produced in various ways, steam turbines via, you know, coal making the steam, natural gas, nuclear, regardless. But hydrocarbons are the basis of our sustenance and our wealth. It's just that simple. It says right here, renewables make up 9% of U.S. primary energy consumption in 2023, with solar and wind contributing 2.5%. And to get that 2.5% was hundreds of billions, if not trillions of dollars. It's stupid. It's not going to be the answer. And then what's funny is when you talk about renewables, where you say renewables makes up 9%, I mean, 5.3% of that's biomass. I would like to delve deeper into that. What does that really mean? And then you've got also not only biomass, but hydro's 1%. And so it's nothing. Okay. This is what sustains life. This is what allows economic progress. This is what allows us to be so productive that we can devote things to like research and the arts and going to sporting events because we have excess. This energy is so cheap. We have, our work can be done so efficiently so that we can meet our basic needs, that we have a surplus of time to do other things. And you're just not going to see that with less diffuse power sources or less reliable power sources like renewables. That doesn't mean they can't, through technology, I guess, change it. But Brunel, you can't really change Brunelli's principles or physical laws around how many photons are going to hit a solar panel, no matter how efficient you make it. Okay. Only a certain amount of photons are going to hit. It's the same thing. I mean, you can make a turbine blade as efficient as you want, but it's still a wing surface. There's a maximum efficiency that can be reached, and you can't actually reach that. And then you get into the situation where you have diminishing returns. So this is why we use fossil fuels, not because we hate mankind and we're trying to poison your kids, because they're useful for us humans to do work. So again, this kind of goes back to what I've said before. It doesn't really matter what happens in the West anymore. The West is a diminishing amount of the overall economic pie worldwide as every year that goes by. And so what matters is what these emerging markets are going to do. So here's an example on coal consumption. And the title of the slide is India consumes more coal than Europe and the US combined. And you see, as India gets wealthier, the energy requirements increase. They're using coal. Why are they using coal? Because, again, I've explained this before. It's easy to transport, store. It's relatively cheap. It's not hard to build and operate coal plants. That's why. And it's interesting to see as coal use declines in North America and Europe, it's climbing in India. Now, you can go to this Our World in Data, and you can click on different countries and make the graphs. You can look at other countries. I encourage you to do that because you'll see look at the countries of the emerging South and East. They're all having a similar, not to the same levels as India, but that's what they're using, right? Fossil fuels, coal. So here's a tweet by Lawrence McDonald talking about India. India is the fastest growing major economy on earth. That's true. Close to 1 billion, probably a little bit over 1 billion human beings with, well, let me revise that. It's like 1.4 billion people. He's saying it's close to 1 billion human beings with no air conditioning, more than 150 million with no electricity. Coal stocks are 220% higher since 2020. We've talked about coal stocks in the past. I like them. I'll be taking another deep dive on them. And I just think that, for what I've seen, it doesn't really matter. Again, if they want to get rid of all the coal use in the West, the coal will be burned in the East. It's just that simple. And the ability to increase coal production and build new coal mines is restricted because of these ESG rules, and I don't see that changing anytime soon in the West. And so this is more on India, and I put the title here, but coal is going the way of the dodo bird, they said, because climate change, except for like in India. And here's some news from India. It says the Indian government asked power firms to place $33 billion of equipment orders this year to build coal power plants. India aims to build 31 gigawatts, that's 31,000 megawatts of coal-fired power plants in 5 to 6 years with the new equipment. So there you go. And you could repeat this across many other places in the global south and east. So I wanted to talk about this chart. I forget where it popped up. I put here war causes inflation and higher commodity prices. This is basically expressing commodity prices versus world M2 money supply, 10-year moving average. What I wanted to point out here is, yes, but why does money supply increase? Because when you have wars, you can't fund it. Governments don't fund it out of saying, okay, Mr. and Mrs. Taxpayer, give me your hard assets, your gold money, so we can go fight this war for our benefit. And oh, by the way, you have to go to the war and be killed. That's not how things work. And so, of course, that's why the governments like fiat money. They like to be able to print money. Then they can, do what they want to do with their wars and their deprivations and their oppressions and all the other stupid crap that these governments do. Okay. And so you go back through history all the way back to the early 1800s, right? You see, just focusing on the commodity prices during the Napoleonic Wars, what happened, right? Commodities went up. Westward expansion of the United States, commodities went up. U.S. Civil War and Crimean War, commodities were up. World War I, commodities were up. World War II, Korean War, commodities up. The Great Society, Vietnam and the Cold War, commodities up. You get the point. And as I've said before, I think that, a lot of people will chastise me and say, you're being provocative or hyperbolic when you say that we're in World War III. We are in World War III. You have a empire in terminal decline, the Anglo-American empire in terminal decline. It is a joke. It's clown world. Look at this. Look at the leader of this thing, or ostensibly the leader, this Biden. We'll talk about that later. And who's really running it? A clown show of credentialed morons with no real world experience, making one bad decision after another. And so that hegemon is receding, and a new multipolar world is replacing it. I'm not saying that the multipolar world is going to be better, but what we've seen in the past is as these things happen, they have a tendency to not be, done peacefully. And so if we are entering, we have two major wars going on right now, both of which have the possibility or potential of exploding into greater conflict, whether regionally or into world wars. Yeah, I don't see the hegemon of the West, the DC and London, just walking away from this Ukraine thing, okay? I don't see the same thing. There's a potential right now, the way that if you've been paying attention to the news in Israel, things are ramping up on the north border. This is Israel's time, and a lot of their people in their government think, to finally deal with all these problems. I think the percent of chance is not zero that they will use a tactical nuclear weapon in southern Lebanon to just like kill all the roaches in their lair, that being Hezbollah. I don't want to ascribe that, but that's how they kind of look at it. That's not a 0% chance. Or if they do crank it up with Hezbollah, which is things are already happening because there's not full-on battles, but there's contact happening. Hezbollah has launched drones and things like that. They're going back and forth with artillery. Stuff is happening if people aren't paying attention. And the rumor is that Israel's going to move into southern Lebanon with an incursion and try to take out Hezbollah. What if it doesn't work? It didn't work before I think it was 2006. They got their butts kicked. And so do they say, okay, this is might be our last throw of the dice. Let's use a tactical nuclear weapon. I mean, who knows? And if they do just start it up conventionally, what's Iran going to do? Iran is a major supporter of Hezbollah. They're not just going to stand by. And then what does the U.S. do? The U.S. still hasn't dealt with the Houthi problem. And now, because of the U.S.'s support of Ukraine and attacks inside the Russian Federation, whether you like it or not, I mean, now you have Russia supplying advanced weaponry to the Houthis and to North Korea. I mean, this thing is getting out of control, folks. And so when somebody says to me I'm being hyperbolic, I don't think I don't think that they're being serious enough, or they don't actually pay attention to what's going on. And so getting back to what's actionable in these times of conflict, commodity prices go up, inflation goes up. I'll be talking about more of this in the August issue, tying this all together of why I think hard assets are the place to be over the next couple of decades and the potential to make life-changing profits. I mean, again, I don't wish this stuff to happen. I don't want bad things to happen. I don't like to see war and people get killed, but things are the way they are. And no one's asking me my opinion or yours. And so you have to play the cards that you're dealt. So here we are. This is the Economist magazine. This is one of the globalist rags, right? You want to know what the globalists think? You read things like The Economist, right? The New York Times, The Guardian, things like that, okay? And here is a walker for an old person with the presidential seal on it and a blurb here on the cover that says no way to run a country. I'm not going to get into, I mean, this whole thing is ridiculous. The question that you have to ask yourself is, the man can't run for office. How is he still president? And so what you're seeing is what I find amusing and what I think a lot of people aren't paying attention to. No one cares what you think as a voter. Why you people have not figured this out yet, I don't know. And I'm not talking about people that are, get this. I'm talking about you people that come here and still don't understand that this is not this is Harlem Globetrotters against the Washington, whatever, Senators, whatever that fake team that they play and beat up on. That's what this is. All I'm hearing on the news is the donor class, Rahm Emanuel's brother, the billionaire, when he, the head of Netflix, he's not going to support the Democrat. All these oligarchs that supply all the money, they're going to make the decision. They had a primary. Biden won. The Democratic Party electorate that, they wouldn't let Robert Kennedy into the primary. They would, you saw it when Hillary ran. They rug pulled you when you guys wanted Bernie. Okay. It's the same thing on the Republican side. Okay. These people do not care. These establishment people who are two sides of the same coin for the most part are not there for your benefit. And this, what am I? There's like what? Most of the people in the country didn't know that the president had dementia. I mean, this was obvious before he was elected the first time. Back in 2020, it's even worse now. And so it's this big, so the media was complacent or was complicit in covering this up, not doing its job. I mean, the mainstream media is just totally discredited. I mean, I was discredited in my mind decades ago, but if you still listen to the mainstream media, there is no help for you. Go play in traffic. There is no help for you. You don't get it. Okay. And these oligarchs, these moneyed people, they're going to go into a smoke-filled room and figure out who the nominee is going to be, because it's all about power. It's all, these parties are nothing but agglomerations of people that have certain interests, and it's to get their hands on that trillions of dollars of budget and be in power. That's what it's all about. It has nothing to do with fixing any of the problems or making your life better. And this is why you see, whether you like it or not, why President Xi in his country and President Putin, they have high approval ratings in their countries, because whether or not they're bad people or not, it's unknown to know their heart. They at least have the interests of their own countries at heart, not some globalist enterprise that's going to individually enrich them. Yes, I'm sure they got rich. All politicians do. But at least they have the interests of their particular country as a focus. I don't see that from our ruling class. And so that's what's really going on here. This is all, kabuki theater and puppet shows. Who are going to run Kamala, Gavin? Who cares? It's still those money interests behind him. Look who the people are complaining in the background. The media, pointy shoes, these oligarchs that give money. Who cares what they think? I thought this was a democracy. Again, I go back, I'm being facetious here when I say this. Kind of goes back to what Gordon Gekko said to Bud Fox. Now, you don't think we live in a democracy, do you? And he talks about, how much wealth is owned by the top 1% and how everything's run for their benefit, not your benefit. And if this doesn't rip the scales off your eyes, this whole ridiculous episode, and then consider this, folks, who's actually running things? Who is calling the plays? And we are in critical times, as I just talked about before, that we're in this situation, World War III. We have a cold civil war going on in the country that can go hot at any time. Again, I don't think the country is going to exist as a political entity in a generation, but that's a separate discussion. And where's the leadership? So we got one guy running for president that's 81, another one 78. Most of the population of the country on the poll, over 50%, doesn't want either one of them. But so how does that happen? And you want to talk to me about democracy, and then these people call me on the phone, want to take polls if I'm going to vote? Yeah, I take the poll. I'm not voting, and they get like stuck. What do you mean? You're gonna? No, I don't vote anymore. I don't want to endorse this abortion any further by voting. Voting gets you. I have to go sit on a grand jury on July 17th. That's what you get for registering to vote. Your life more inconvenienced to go down and sit in a hot room with a bunch of morons that have nothing better to do for some marijuana, who knows what. No, I'm not interested in civic duty anymore. I'm not interested in any of that. This whole thing, again, is just revealed how much of a sham and scam the United States of America actually is. And that doesn't mean the people are bad. Most of the people in the country are generous people, decent people, hardworking people. But this is what we have. Again, no way to run a country. Well, I agree with you on that, The Economist. So this is Alexander Lukashenko, who is the president of Belarus, another hated person in the West. Again, post-Soviet person that's been in power. People call him a dictator, what have you. But most of the people that have said that have never been to Belarus. They don't know how things are there. And yet they want to comment. But what I want to point out is what he said. He was talking about, they had a meeting there in Belarus. Putin came there, and they were talking about the recent meetings with China and basically the global South and East. And this is what Lukashenko said, because I think this is where we're heading, and this is where the conflict is coming from. This explains why we're going to have this conflict, or why we're having this conflict. It's nothing to do with democracy in Ukraine. This is what it's about. He says, however, the golden billion, he's talking about the Chinese, is not happy about it. He's talking about, what's going on in the world and how the hegemon's trying to basically, hold down these other countries like China, Russia, India, that whether you agree with it or not, that's how they perceive it. Okay. This is the first, before I start into this, you have to understand, and you have to be able to walk in the other person's shoes. Whether you agree with their position, you at least have to understand what their position is. And if you're a serious person, you have to take that into consideration. We don't do that. We just do it's my way or the highway, which we can't do anymore. Okay. And they're tired of it. And so this is where the conflict comes from. But let me get into what he said. However, the golden billion is not happy about it. The West has built its wealth and established political, economic, and military superiority by colonizing and ruthlessly exploiting other countries for centuries. The Washington-London hegemony sees the world as its property and the global population as mere tools for achieving its prosperity. This is the crux of political economy and the root of numerous international security challenges. This doctrine underpins the conflict in Ukraine, and we know why it continues. As a result, the world today faces a deep crisis. I firmly believe that our unity and cohesion are the best responses to these challenges in global politics. To achieve this, we must join forces within the organization's area of responsibility. For this, we need to create greater Eurasia. So now you know what the game is. The game has always been read The Great Game by Zbigniew Brzezinski. Go back and look what Kissinger said. Go back to what the British did, why they had the Crimean War. Okay? Whoever controls Eurasia, okay? That area of Eastern Europe, East, okay? That new Fertile Crescent I'm talking about, okay? Controls the world. The amount of resources that are there, the population, they're tremendous. They understand that now. And so that's what the whole thing about BRICS is, to put up this competing block of countries to resist the hegemon, which wants to come in, at least they perceive it as coming in, creating this neo-globo-homo new world order where they break up Russia into these various statelets so they can have these Western corporations and bankers go in and exploit the resources. That's exactly how, whether you think that that's what we are or what we have done in the past, I happen to agree with that. That's basically the playbook we ran for the last 200 years, the Anglo-American hegemon. That's my view. Whether you agree with that or not, that's how they perceive it. And that's what they're doing. So instead of, why, when you're losing in Ukraine and Israel is losing in the Middle East, are you talking about cranking up a war with China? You can't even deal with the Houthis and get the Red Sea opened with this vaunted navy of yours. And I know this is a hard pill to swallow. You better start thinking about this because the U.S. is in terminal decline. It's not going to dry up and blow away. The U.K. didn't disappear after Britain wasn't the world power. Same thing with Spain. It's still there. But the U.S. is probably going to break up into what's probably going to be ironic about this whole thing is it's not going to be Russia that breaks up. It's going to be the United States that breaks up. And at this point, I don't think that's a bad thing. That doesn't mean the people are going to disappear. It doesn't mean that there won't be areas where there'll be, empowerment. But this is, just look at how things are. And going and voting for one man for a 4-year term isn't going to fix it. Let's use immigration as an example. That's the biggest threat to the cohesion of the U.S. That's my view. You can't bring in 10 million people, unlimited amount of people from the world's peasant class and, expect with all these different cultures and languages, there's no assimilation. There's no, it's just not going to work. And so people say, well, Mr. Trump says, well, we're going to run the biggest deportation thing in the history. That's not going to happen. Think about this. The United States people will not stand for the level of violence that will be required to deport 10 million people, most of which against their will. You don't think the news media, there have been countries that have deported millions of people. They'll show you the videos from the 40s when the deportations of European Jewry to the eastern parts of Europe happened. That's what they'll show you on TV. They'll show you you're going to have to go into businesses and disrupt businesses. You're going to have to go pull people out of the fields. There's going to be all the little shock stories about, well, little Janet was born here, but her mom wasn't. She's not a citizen, blah. The United States people, yeah, they'll go find all the violent criminals, stuff like that. But, what has been done now. And again, the American people won't stand for that level. They should, but they won't stand for the level of violence that would be required to deport 10 million people, most of which against their will. It's just not going to happen. And the tracking people down, pulling people over, going into houses, it's just not going to happen. And so if you think that one man who's 78 years old is going to be able to reverse all this, this was put into play in 1965 when they made this Immigration Act. That's when the time to deal with it was, but no one could foresee, the baby boomer generation was too busy smoking pot and doing free love. Okay, so again, that doesn't mean things are going to end. That doesn't mean things, people say, well, what should we do? What you should do is live a good, virtuous life. That's what you should do. You should have children. You should educate those children properly. Okay, you should raise them in a godly environment. You should not give money to people who hate you. I just saw something on Twitter the other day. Somebody said they were going to Disney World. They're going to stay at the Polynesian Village and blah, blah, blah. And the whole thing's going to cost the family 12 grand. Why would I give $12,000 to Disney? I mean, I wouldn't do that. Turn off your television set. Read. Learn skills. Grow your own food. That's what you should be doing. Okay, you're talking about planting oaks here. The person that plants these trees, there was a story about somebody. I read a story about the olive oil business, and it was in Morocco, I think it was. And there's a certain olive tree that gets planted to these families. You know, they're generational businesses. And this particular olive tree, I don't know the species. If you plant it and cultivate it and take care of it, it doesn't produce any fruit for 40 years. And so the guy, somebody that was interviewing, the guy was like in his 50s, and he was talking, the farmer or the guy who owned the olive grove. I believe that's what you call it, a grove. But regardless, he was asked by this journalist or this interviewer, why are you doing this? You're never going to see the results. And he said, because this is what my father did and handed down to me. This is what my grandfather handed down to him, and so on and so forth. And that has importance and that has value. And that's how you have to look at this. You know, your example is the Amish. I'm not telling you to, like, you know, become a monk or live aesthetically or live like the Amish, but the example of not participating in the world, in at least the horrible parts of the world. It doesn't matter who's the president of the United States to most people's life. Okay. If you want to focus on politics, focus on local politics so you can actually have some impact. And then once you get all of that fixed, then you can move up to the state level and then the federal level. But everybody wants to just sit on their butt and do nothing and then think they're going to go throw a lever for one man. I mean, there's an entire apparatus of state. Withdraw your support from this Leviathan. Take the money away from it. That's how you deal with this. And we probably won't see the results in our lifetime, but that's okay. That's how this is done. That's the real playbook. Now, people don't like that because we have this fast food mentality that you just roll up, throw your order, and then you roll up to the window and they hand you all your stuff and you're good to, and your hunger's sated. But that's not how this works. And so it doesn't really matter what we do as individuals. There are men out there and women and families that are doing this, and more people are doing that. That's why we're seeing such an influx of people into orthodoxy. People are tired of the world and the way it is. And so, again, getting back to investing, getting back to what's actionable, these are the trends. Does it mean I like the trends? Not necessarily. Does it mean I endorse the trends? Not necessarily. Do I think that maybe with China and Russia and the global East and South as the hegemon, things will be better? Not necessarily. What I'm telling you is what's likely to happen, not what I want to happen. And so that's the way we need to look at the world. And then what are the ramifications? India is going to continue to burn more coal, whether anybody, Keir Starmer in the UK says so or not, or Ursula von der Leyen. They don't care. These people are irrelevant. So you have to focus on what's actually important, what's actionable, and what you can actually control. You can get out of the rat race, downsize so that, you know, or create a business or get a skill where you as a man can work and support a family. It necessarily won't be in a metro area where you're living in a suburban house with all the attachments, but you can live a good rural existence, have your wife that buys into this, having children, raising the children, schooling them at home, raising them in a godly environment, because now it was 2 people that had that idea, and now there's 4, 5, or 6 more people that have that idea, and this is how you change things. It takes a long time. So that's my view on these things. Okay, that's the rant for this week. A lot of stuff is happening, guys. A lot of things are moving. You know, as Lenin said, nothing happens, and then, you know, everything happens in a couple weeks or something similar. But we're living in historical times. There's going to be, if you just want to talk about from an investment point of view or speculation point of view, a tremendous amount of opportunity is going to be out there. But I think you really have to clear your mind of the way you got to get rid of the recency bias and the normalcy bias and understand that a lot of stuff's going to happen that you couldn't foresee, and you have to be prepared to react to that and deal with it, whether you like it or not. Because if you don't, you know, I was listening to a guy, it's very possible that there will be zero or negative returns for the S&P over the next 10 years because of the all higher returns we've had. So you have to deal with this. Why would you want to buy? There's no reason you can buy and hold bonds long term because they're going to go back to what they were described at in the 70s and early 80s as certificates of confiscation. And so the world is turning from what it was before. Low interest rates, low labor costs, relative peace, that's all changing now. Everything's reversing. And so higher inflation, more conflict, more disruption, more government interventions. We're already seeing it in the West with some of the elections. And so more remains to be seen, but we will, like I said, that's what we're trying to do here. We're trying to stay ahead of the curve and look at things for the way they are, not the way we want them to be. Okay, guys, that's it for this week. We thank you, and we'll talk to you soon. Bye.